So you've got basically the beginnings of a civil war now, where these African and Middle Eastern cultures are incompatible with the extremely socially and economically liberal ethos that dominates Europe right now. That's leading to the rise of political parties of both the right and the left that used to be considered way out on the fringe and very extreme, now getting a lot of votes because they're the ones who are willing to say what needs to be said.
Our top tech company of 2016 is on track to earning millions of dollars in royalties as they're revolutionizing the $120 billion battery industry, a potential lottery ticket in a truly game-changing technological revolution. Headed up by Paul Matizik, whose track record is delivering 1,500% to 4,000% gains to investors with his last 3 companies. Learn more at crushthestreet.com/tech2016.
Hello, everyone, and welcome into crushthestreet.com. We got a returning guest today, a Crush the Street favorite. He is a truth seeker, John Rubino of dollarcollapse.com. John, thank you so much for joining me today.
Oh, sure, Ken. Good to talk to you again.
John, I know we've covered a lot of different economies over time, and I want to focus today specifically on Europe and what they're seeing over there in the European crisis. And, just kind of going back a few years, really during the 2008 crisis, guys like Peter Schiff, if you were following a guy like him, his analysis was very much the U.S. is the worst disease of the entire body, and if once the U.S. collapses, the rest of the world would take off in this economic prosperity. Talking about China and Europe and some of the other countries that wouldn't be burdened by the U.S.'s problems. Now, since then, we haven't exactly seen it play out like that. In fact, it could be said that countries like Europe are worse off than the U.S. is at the moment. And, we won't get into comparing too much right now, but let's talk about Europe. And you've done some research on this. Let's start off with the European pension predicament and how bad it really is.
Yeah, almost any angle from which you approach Europe turns out to be a mess. They have really screwed things up. Not that we haven't, but Europe's story is particularly interesting because so much of it was pretty easily predictable. Let's go back to the decades after World War II for the beginning of this story, and most of the European countries then set up very generous entitlement systems. In other words, universal health care and versions of what we would call Social Security, retirement benefits, that basically gave somebody who spent a lifetime working and paying taxes and following the rules a reasonably stress-free retirement. Okay, in other words, generous enough to take care of that. But they didn't put any money away to pay for future obligations. They just set up pay-as-you-go systems so that each year's retirement benefits and health care entitlements came out of current tax revenues. The problem with that is that the baby boomer generation, who were born after World War II, that's the biggest generation in most modern countries. And when I'm a baby boomer, when we start to retire, the costs of these programs go through the roof. And so Europe never put anything away for this. They don't have any trust funds or any dedicated accounts that they can draw on.
Unfunded liability, right? Would it be considered that?
See, that's what we have in the U.S. because we're lying about our expenses. We have this separate category called unfunded liabilities that we report, but we don't include in the deficit or the national debt figures. And in Europe, I guess you could say they're a little more honest about it because they don't even bother with stuff like that. They just have this expense each year, and the expense is going way up. So you can run the numbers, and some people have, and call it an unfunded liability. But basically, it's huge. Whoever runs the numbers comes up with some astoundingly large number in the multi-trillion euro dollar range. And so going forward, they're going to be bankrupted by this. Just this alone, just this problem right here would basically destroy the Eurozone as we know it. But that's just one of their many problems. They've got this demographic issue, obviously, which feeds into the problem with their retirement programs, because they're getting older and there are fewer and fewer young people coming along to work hard, pay lots of taxes, and take care of their parents and grandparents. And so there's this wall out there that will bankrupt them, basically. They'll just hit a point where they can't raise taxes anymore, because beyond a certain point, raising taxes is a negative-sum game. You take away X number of euros from the average working person, or you try to, and you actually end up getting a much, much smaller number. You get less than you would have gotten if you hadn't raised taxes, because people stop working, or they can't pay their own bills and they go bankrupt, or whatever. You end up destroying the wealth creation mechanism of capitalism beyond a certain point in tax levels. And Europe is there now, so they're really regressing economically. They're getting poorer instead of richer, when they need to get much, much richer in order to cover their obligations.
John,
so,
let me jump in right there. So it kind of leads into my kind of what I wanted to talk about next, which is, the immigration issue that we're seeing in Europe. And you kind of talked about not having enough workers to pay for all the retirees. And there's this idea that if we have more people come into this country, immigrants will have more workers, and this will fix the the tax revenue problem, because you'll have more workers in the system. But does importing a bunch of poor people into a country actually make and give the situation a positive result?
Well, it depends on who the people are. And, this is kind of a very uncomfortable conversation for most people to have, and I'm going to skirt around it. But basically, the U.S. early on, we had massive immigration, but it was mostly Europeans coming in and some Chinese who are culturally very compatible with the U.S. as it was configured then. They came in, they worked hard, they assimilated, and 2 generations later, they were basically Americans, indistinguishable from anybody else. My Italian ancestors were like that. My grandparents never really learned to speak English, but my brother and sister and I are completely American. We don't even think of ourselves as Italian anymore, so we fit right in eventually, a couple of generations later. And what Europe tried, they basically tried the same thing by importing lots of relatively young people. They thought, well, we'll have workers who are going to, come here and pay lots of taxes for the next 30 years. And that's how we'll get around this demographic entitlements issue that is going to destroy us otherwise. But they basically opened the floodgates to people from the Middle East and Africa who aren't assimilating for whatever reason. It's just not working. And so it's causing more problems than it fixes. And so there's still left with this demographic issue that is going to blow up in their faces very, very soon. I mean, the increase in expense as baby boomers retire is absolutely debilitating for most of these countries. And so you could say, looking at their books honestly, that they're already functionally bankrupt. Even somebody like Germany, a country that most people consider to be just firing on all cylinders, the success story of the global economy, is only that if you ignore the unfunded liabilities of all their entitlement plans. And if you include them, their government finances just crater. They look horrible and unsustainable.
Are we seeing the immigrants become an entitlement burden on the European society yet, or likely to be a burden in the future?
Well, in the short run, a big influx of immigrants costs money rather than makes money, because you've got to set up infrastructure for them. You've got to build schools to educate their kids and hospitals to give them health care. And at first, no matter who they are, at first, they're not generating enough wealth to cover that expense. So it's an investment at first. And for the investment to pay off, those people have to settle in, assimilate, and basically become working class citizens of whatever country that we're talking about. They've got to work very, very hard for a relatively meager return in the interest of building something for their family in the future. You basically sacrifice a generation when you have a big influx, or when you're an immigrant. You go there not thinking that you're going to have this nice cushy life. You go there and you intend to work your butt off for your lifetime so that your kids don't have to do that. That's the thought process and the attitude of immigrants as we know them in the ideal sense.
Yeah.
Okay. Our ancestors did that.
That's a really good point, but I guess what I would say the flip side of that is their life is so bad where it is that they going to wherever it is they're going to go, they're going to have a better life than where they were. So there is some upside for the person who's sacrificing their life to move to a better place,
or at least a better future. Yeah, if somebody came here from 1925 Europe. Yeah, it's true. They're working really hard every single day, but their life is still better than it was back there because they have a trajectory.
Right.
That work actually feeds into a process that builds a future. Whereas in a lot of places around the world, you work hard every day just to eat, and your life doesn't get any better. And here, the American dream was that hard work and staying out of trouble and obeying the rules, because they were reasonable rules, led to something much better for you and your family. And it's arguably not the case, at least in the minds of a lot of immigrants into the developed world now, because we don't have the bottom few rungs on the economic ladder like we used to. It used to be that you could go show up at a factory and they would take you on. And in 4 or 5 years, you're unionized and you're making lower middle class money. Boom, just like that. And there's nothing like that anymore.
Right.
Here, in the U.S. now, you become an Uber driver or something like that with no benefits and just enough money to pay your bills, not enough to support your family. And that's basically it. So this 4.9 unemployment rate in the U.S. is a cruel joke.
Really
but in Europe, to go back to that theme, what's happening now is a lot of the people from the Middle East and Africa are choosing to keep their previous culture and just try to transplant it into Europe. So you've got basically the beginnings of a civil war now, where these African and Middle Eastern cultures are incompatible with the extremely socially and economically liberal ethos that dominates Europe right now. And so these guys really aren't sure what to do, because on the one hand, you've got an institutionalized multiculturalism in which it's literally a crime to criticize someone else's religion, especially if it's a religion from the developing world, or a culture from the developing world. You literally go to jail for hate speech in countries like Italy for something like that, and I think France. And so the fact that the cultures that are coming in are turning out not to be compatible with the existing dominant culture is presenting these guys with a real problem, because how do you discuss it in an environment where honestly discussing it is defined as a crime in a lot of places? And so that's leading to the rise of political parties of both the right and the left that used to be considered way out on the fringe and very extreme, now getting a lot of votes because they're the ones who are willing to say what needs to be said, or what they perceive needs to be said, and what a lot of voters perceive needs to be said. So you've got National Front in France, which is a formerly neo-Nazi party that has cleaned up its act to an extent and is now an anti-immigration party, and they're the biggest vote getter in France. And UKIP in Great Britain is now leading the Brexit charge. They're the main impetus behind the referendum that's coming up pretty soon in Great Britain about maybe leaving the European Union, and immigration is the main issue there, because if they leave the European Union, they get to control their borders again, and they don't have to be at the mercy of 10 million people coming in from Syria or wherever and tramping across Europe and going across the channel and showing up in Britain, and then automatically qualifying for all kinds of government benefits.
Here,
right now we're at the mercy of that.
Let's stop right there, because I did want to talk about this Brexit, the British exit, Britain's exit here for a little bit, and you touched on it, which, so we're seeing it be an origination from the immigration. Does it have anything to do with the British economy being better than the other countries in Europe, or is it simply the immigration issue?
Well, immigration is an issue for everybody in Europe, and you're seeing all kinds of different responses to it. They're building fences around their countries, and they're trying to suspend the Eurozone rule, or the European Union rule, that allows free movement of people across borders. So it's a problem for everybody. But Britain has a bit of an advantage because they never joined the euro in the first place. So they aren't suffering from the fatal flaws of the common currency as it was originally envisioned and implemented. And so that's a whole different problem. I mean, to even do away with the whole immigration thing. And Europe still has a fundamental monetary problem that they're not really addressing, which is that the euro is a currency that operates with a common monetary policy that's mostly dictated by Germany. And what makes Germany comfortable is existentially threatening to Italy and Spain and Greece and Portugal. Those countries can't operate under a monetary regime that makes Germans happy, and vice versa. If you create a euro that you're actively, aggressively inflating away, which is what the Italians and the Spaniards would really like, then Germany, which went through a hyperinflation within living memory, is terrified by what they see happening, and they're not going to let that happen. So these guys have some fundamental problems of a monetary nature that are also existentially threatening to the system as it now exists. So, as I said, however you approach Europe, whatever angle you want to analyze them from, they've got existentially threatening problems now, and the monetary problem is one. But Britain at least avoided that by not joining the Eurozone. There's a great video of Margaret Thatcher in the 1990s debating this issue in the House of Commons, and she just shreds it, and she looks really prescient and really brilliant, and it's easy to see why she was the towering figure that she was back then, when you see how she anticipated the problems that would flow from Britain trying to completely integrate itself into Europe and basically put itself under the power of bureaucrats in Brussels and monetary authorities that stand above the Bank of England. She wasn't having any of that back then, and she turned out to be right. So now Britain is debating whether they want to keep even the membership in the European Union.
Who suffers?
It's a close bet right now.
Who suffers if they do leave, and who would be the benefactor?
Well, that's the question. Nobody's tried to do this yet, and they're really, from a regulatory standpoint, deeply intertwined with the European Union. Their businesses operate on the continent under a set of rules that they've accepted and internalized now. And when they leave, a different set of rules apply to them. So and then there are British expats living in Europe who live now under a certain set of rules. Those rules might change in the future if Britain is no longer part of the EU. Those expats living in Europe won't be EU citizens anymore. So there's the potential for a lot of turmoil on the way, from here to whatever comes next. But I think in the end, it's doable, because lots of countries operate just fine outside of the EU, while they still do a lot of business with the EU. They still operate with big trading companies there, and they get along just fine with the Eurozone and the European Union. And so eventually Britain could be one of those countries and get along just fine too. It could work, but there's turmoil on the way, and nobody really knows exactly what the nature of the turmoil will be or how serious it is. So that's the thing that they're wrestling with. They see there are some dysfunctional parts of the European Union that they'd like to do away with, and they're not sure how big a leap into the abyss it would be to actually leave the Eurozone. So that's the debate that's going on now. And unfortunately, you can't know the answers to these questions except in retrospect. You got to do it before you find out what it means. And so right now, the vote looks pretty close to 50-50. It's not a done deal either way. And the debate is ongoing. And it's really interesting because either way, it sets a precedent, and it creates a partial roadmap for other countries who have similar problems and are looking for viable solutions. So, there's no way to tell, but it's going to add to the turmoil in the global financial markets either way, because if Britain stays, they've got all these same problems that are going to come to a head pretty soon. And if they leave, they've got a whole different set of issues to work through. Either way, we're looking at extreme volatility in the global financial markets going forward, and there's no way around that because the amount of debt that we've taken on guarantees, bakes a crisis into the cake, and that's our cake. That's our dinner for the next few years, where we've got to figure out how we fix these fundamentally unfixable problems. We're just going to have to go through some kind of a big crisis to hopefully come out the other end. But there's no guarantee here. We've never been in a situation where there's this much debt in the world and every single major country has an unlimited monetary printing press and is totally willing to use it to do experimental things.
John, talking about debt here, I wanted to ask you this question. We got Obama ending his term here, and do you think with the U.S. just over $19 trillion in debt, do you think we'll be at $20 trillion by the end of the year? And I ask you this because, they say the official deficit is about $500 billion, but we've seen the official national debt spike dramatically out of nowhere. Even last year in November, we saw the debt spike $339 billion day one after the debt ceiling was lifted. So I'm just want to get your thoughts on, do you think, kind of like a fun guess, do you think we're going to be over 20 trillion by end year?
I don't know. The U.S. debt will continue to go up, but the official debt is such a fraud that it's almost not even worth thinking about, because as we talked about earlier, the real debt in the U.S. has to include these unfunded liabilities, and they're 3 or 4 or 5 times the size of the officially reported national debt. And then private sector debt is going up again. And you really have to include that in any measure of a country's debt, because it's all the same thing. You and I owe our share of the treasury bonds that are outstanding, right? We got to pay the interest on that. Mm-hmm. But we also owe our mortgages and our credit cards. And we owe the unfunded liabilities for Medicare that are out there where the promises are really unbreakable. Go ahead and try to take health care benefits away from the baby boomer generation. We are the most selfish generation that's ever existed. We've always done what's best for ourselves. And, if you millennials or Gen Xers or whoever try to take away our benefits, we will crush you. and we'll elect somebody who will put all those benefits back and give us more benefits. And so those are just as real obligations as our interest on treasury bonds or whatever. And so you got to lump all that into the national debt. And then if you do that, you get $100 and some trillion, okay? Way more than the 17, 18 trillion that we have officially reported. And then you got to look at derivatives, which also don't appear in any debt measurement, but they're a huge obligation. There's $2 quadrillion or going on $2 quadrillion of notional derivatives out there, which are basically bets placed by big banks and hedge funds among themselves on movements in interest rates or credit defaults or whatever. And they don't show up anywhere, but they're a real obligation, because if some of them go bad, many of them will go bad. And then this this notional value of a quadrillion dollars of liability will turn into a real value of pretty close to that. That almost happened in 2008, 2009, except that the government came in and bailed out some of the big derivatives players. If the government hadn't done that, Goldman Sachs, JP Morgan Chase, Citigroup, and many, many other big finance companies would be gone now.
Yeah.
And
we're dependent
we didn't
on
fix
a rising
that.
market to keep those going. We're dependent on a rising market to keep those going.
We totally are. Let there be another serious crack in the stock market. We can't survive another 2008, 2009, 50, 60% drop in stock prices, because we've already taken on $60 trillion in official debt since that time in order to deal with that crisis. Plus another 100 and some trillion in this unofficial debt that we've been talking about. So we're so deeply indebted now that another bailout of that magnitude is probably just physically and financially impossible. So the next one is going to be an existential threat to the global financial system on a scale that even 2008, 2009 was not. And it's coming. I mean, you don't go 8, 9, 10 years without some kind of a serious bear market. And we've already gone, what's it been now, Ken? 7, 8 years that this bull market has been going?
2009, I guess. Yeah, 7 years for the bull market.
Yeah, and so that's usually the lifespan of a bull market. And by every measure, if you look at equity market capitalization to GDP, which is a pretty good indicator of future stock market returns and the propensity for a crash out there, we're at among the highest levels ever. We're second right now only to 1999, 2000, when tech stocks had gone so insane. So historical measures of equity valuations say that we're either going to have a crash or a period of extremely low returns that just drags on for a really long time. Either way, that's an existential threat to the global financial system. And,
well, John, I want to get your final concluding thoughts here, but I read this off of one of your posts, and it said that the inevitable is now imminent. And for years now, we've been hearing that just because something is inevitable does not mean it's imminent. And now it's imminent. So your final thoughts here as we conclude this interview.
Yeah, I took that from Sprott Asset Management's Rick Rule, who has said that a few times, and I always thought it was a great phrase. And it is that you don't want to mix up inevitable and imminent. Because when you're investing, timing is so important. Just because something bad is going to happen way out there or something good is going to happen way out there, don't place your bet on it unless it's going to happen shortly. And that was a big mistake that a lot of people made over the last few years. They loaded up on gold because gold was going to go through the roof, and they shorted the stock market, which I did a couple of times there before these measures of equity overvaluation got to a critical point. Well, now they're at a critical point. Now they're at the point where, based on history, we don't have 5 more years of this. We've got a year at the most, or some months, or something before something comes along to change the gestalt out there. The sense of where we are and where we're headed. And so I think it's reasonable to say that what has been inevitable for quite a while is now imminent. And that doesn't mean next week, but it probably means sometime in 2016, 2017, we get another crisis. And this one is going to be just insanely scary because of all the stuff we talked about here today.
Everyone, that's John Rubino of dollarcollapse.com. John, if people want to learn more about you, can you tell them a little bit about what they will find when they visit you at your website?
Yeah, dollarcollapse.com covers a lot of the stuff that we talked about today on an ongoing basis. So the idea is that you show up there and spend an hour looking through links and reading posts, and you're pretty much caught up with the global financial crisis.
Sir, I appreciate you coming on the show with me and always just sharing some great insight with us. We got to talk about the European crisis today and even got into some of the stuff that's here on the mainland. So thanks again, sir, and I look forward to talking with you soon in the future.
Great. Thanks, Ken.